With us. Let's just get in an important management. Lalit Jalan, who's the CEO of Reliance Infra, joins us with a quick discussion and update as well as an insight to the future for Reliance Infra's earnings. Mr. Jalan, thanks very much for speaking with us. First up, it's been a tough quarter in terms of the overall financial performance. On an adjusted basis, the numbers are below what the street was expecting. What do you think what have been really the key drivers for this sort of a disappointing performance?
Let me say that the street was expecting, as per Bloomberg estimates and Reuters estimates, net profit of around 356 crores, and we have beaten the street marginally, and we are at about 382 crores for the quarter. So it's been an encouraging quarter. All our various verticals, if you look at our electricity business, there is growth, there is issues of the regulatory assets or tariffs, they are getting resolved. On the infra businesses, our projects are coming under execution. We now have 8 road projects already revenue operational, and so the infra businesses also are showing 45% jump in top line. So it's been an encouraging quarter as we see it for the company.
Lalit, the standalone profits for Reliance Infra for the quarter gone by of 414 crore were boosted by a large other income of 346 crores. Could you give some more details on the other income number?
If I look at other income is essentially the interest income that is made up from our treasury cash at hand, and on a sequential basis there is not much of a jump, but if you look at on a year-on-year basis, we have much more investment income this year compared to last year. Also, when we compare to last year we had a one-off item on account of depreciation write back of around 250 crores. So once we remove it, there is the performance during the quarter is significantly better than last year.
Okay, on a standalone basis, margins in the EPC business have come off quite substantially to sub 10% levels. What would you attribute this weakness to, and what do you forecast in terms of the kind of level that you can sustain going forward?
No, this is on the EPC business, as we said, that we have a mix of 13 projects between generation, transmission and roads, and as this mix changes and the projects are at various stages, the mix is showing a 20% reduction in top line. We expect to finish the year marginally lower compared to last year. Last year we should not see in isolation. Last year was a spectacular jump in the EPC business. We were a company doing about 3,500-4,000 crores of EPC revenues a year, and last year was a one of 10,000 crores plus. So we should be doing 8,000 crores for the year, which will be more than twice what we did 2 years back.
Lalit, on a standalone view, margins in the EPC division have collapsed to about 10% or sub 10%. What would you attribute this to, and are these levels likely to sustain or they can drop further?
The guidance that we give for our EPC business is in the 7 to 8% EBITDA margin, and during quarter to quarter these numbers might vary a little bit quarter to quarter. However, if you look at on a 5-year basis, we are at pretty close to 8% EBITDA margin with respect to our turnover, and we are fairly sure of meeting our guidance of 7 to 8% EBITDA margins going forward.
What were the toll revenues this time around for the company, and also could you give us an update on the BOT projects coming up for commissioning?
In the third quarter, let me put it in the third and fourth quarters combined, we will have 2 more road projects which will get commissioned. One is the project, the TK project in South India, and one is the Jaipur Ringus project in Rajasthan. And with these commissioning of these two projects, we will have 10 projects out of 11 which will be revenue operational, and only the Kandla Mundra project will be the one where the execution is going on, which will not be revenue operational. By the end of next year, all our 11 projects will be generating revenue for the shareholders.
Lalit, the key concern for analysts is the lack of new orders. With the EPC order book approximately at about 14,000 crore, revenue visibility for coming quarters looks slightly hazy.
No, this is a very, very good question. Unlike other EPC companies, the projects that we look after are very, very lumpy in nature. There are many projects in the pipeline. We have the Reliance power projects of Tilaiya and Krishnapatnam, which we are in discussion with them. There are also the hydro projects in Arunachal Pradesh, which we are in discussion with them, and as well as the Sasan expansion. So as these projects fructify and we get the clearances, these projects are very, very lumpy. So with the addition of any one of these projects, you will see a substantial jump in our order book.
Give us an update on the Delhi Metro project. Reports suggest that you had offered, wanted to quit because of the financial non-viability of that project.
No, the reports are very mischievous, and it do not report the truth at all. We are very keen and we are fully committed to running the Delhi Metro line. It's an iconic metro line that has been built by the company, and we are very proud of it. Owing to some civil defects which were owing to the vendors of DMRC, the line had become unsafe, and with consultation of all the stakeholders, we had to take a shutdown of the line. The line has now been rectified, almost fully rectified by DMRC over the last 4 to 5 months, and the process of certification is on. Once the CMRS, which is the nodal agency, they will we will announce that the project is safe to operate. We are ready to start operating the line. So we are looking forward to operating the Delhi Metro line. No sooner do we get the certification process, which we hope to do so shortly.
So Jalan, appreciate your time and thank you for your insights, and we'll certainly see you again next quarter. What about markets? Well,